Good morning and welcome back to Golden Crest Finance. It's good to have you here with us again, wherever you're tuning in from today. If you're new to this channel, we'd be honored to have you join our community. Please consider subscribing so you don't miss the stories that matter most to your financial future. And if you have a moment, let us know in the comments where you're watching from today. We always enjoy hearing from viewers across the country and around the world. The US dollar was sliding. It was getting close to a level that traders watch very carefully. This level is found on something called the DXY, or the dollar index. For years, this number has acted like a line in the sand. When the dollar drops below it, many traders see it as a warning sign that a bigger downturn could be coming. At the very same time, another major announcement was made. The White House revealed that Kevin Walsh would take over as the next leader of the Federal Reserve, replacing Jerome Powell. This is one of the most powerful positions in the entire world economy. The person who holds this job helps decide interest rates, which affect everything from mortgages to credit cards to the price of gold. Gold and silver prices crashed, not a small dip. This was the sharpest one-day drop in the price of gold and silver since 1971. For people who don't follow financial history closely, 1971 was the year the United States completely stopped backing its currency with gold. That means this recent crash was being compared to one of the most important turning points in modern money history. For many everyday investors, the timing felt strange. Gold and silver are often seen as safe places to put money during uncertain times. But suddenly, in the span of a single day, that safety appeared to vanish. Prices fell hard and confidence was shaken. Soon after, people began asking questions. Was this simply a normal market correction after prices had climbed too high too fast? Or was something else going on behind the scenes? Some analysts pointed out that gold and silver had indeed been rising quickly in the months before. A pullback, they said, was not surprising on its own. But others noticed something more. The selling appeared to happen mostly during U.S. trading hours. At the same time, the dollar managed to recover just before it could break through that important support level. And the new Fed announcement was followed by a wave of news coverage describing the incoming leader as someone likely to keep interest rates firm. To some observers, these events lining up so closely felt like more than just coincidence. This is where the story becomes important for everyday people, not just professional traders. Many families across the country hold gold or silver as part of their retirement savings. Others have started buying small amounts of metal as a way to protect their money from inflation. When prices fall sharply and suddenly, it affects real people's plans, not just numbers on a screen. At the heart of this story is a much bigger question. The United States currently owes close to $40 trillion in national debt. This year alone, the government must refinance about $10 trillion of that debt. To do that successfully, the government needs the world to keep trusting the US dollar. A weak dollar makes that job much harder. A strong dollar makes it easier. This single fact helps explain why so much attention has been placed on defending the dollar's value in recent months. Treasury officials have spoken publicly about the importance of keeping the dollar attractive to global buyers. And many analysts believe this effort directly affected what happened to gold and silver prices in January. So as the calendar moved closer to the middle of the year, one moment in January kept getting mentioned again and again. It became the starting point for a much larger conversation, one involving rumors of gold revaluation, talk of new financial tools, and growing curiosity about what the government might do next. To understand what is happening now, it helps to look at the rules behind how money and trust actually work in today's financial system. The US dollar holds a very special position. According to the Bank for International Settlements, the dollar is involved in almost 90% of all foreign exchange trades around the world. This means that when companies or countries trade with each other, the dollar is almost always part of the deal, even if neither country is the United States. This gives America a huge amount of power. It also gives America a huge responsibility to keep the dollar stable and trusted. In recent public appearances, Treasury Secretary Scott Bessent has spoken openly about defending the dollar's position. On a recent television interview, he explained that keeping the dollar strong is one of the top priorities of the current administration. He pointed to several examples to support this idea. Venezuela, which had been locked out of using dollars due to sanctions, is now starting to use the dollar again for trade. Iran may soon do something similar as talks continue. He even suggested that once the war between Russia and Ukraine ends, Russia could return to using the dollar system as well. These comments matter because they show a clear pattern. The government is not just hoping the dollar stays strong. Officials are actively working to make that happen, country by country, deal by deal. At the same time, attention is turned toward a very different topic: gold revaluation. This is the idea that the government could officially change the value placed on the gold it holds in reserve. Right now, the price most people see for gold is set by the open market, where buyers and sellers trade gold every day. But the government also holds its own gold reserves, and the official price tag on those reserves has not changed in a very long time. Some people believe the government may raise that official number. By doing so, the gold reserves would appear far more valuable on paper. Supporters of this idea argue it could help make America's debt look more manageable, since the country would technically own more valuable assets. There's also talk about a possible gold-backed bond. Judy Shelton, who once advised the Trump administration on economic matters, has suggested that the government may introduce a 50-year bond backed partly by gold, possibly timed around the Independence Day holiday on July 4th. The idea would be to offer investors something with long-term gold backing, giving them more confidence in lending money to the government for many decades. However, as of now, no official confirmation has been made by the Treasury Department or the Federal Reserve. These remain predictions and possibilities, not confirmed government policy. It is important for viewers to understand the difference between an expert opinion and an official announcement. Meanwhile, some people have pointed to recent activity at the U.S. Mint as a possible clue. The Mint has been selling special gold and silver collector coins at very high prices, far above the normal market value of the metal itself. Some believe this could be linked to revaluation plans. Others say this is simply normal behavior for rare collector coins, which have always sold at a premium because of their limited supply and design value. There has also been unusual activity in the options market, where investors place bets on future prices. Some traders have purchased contracts betting that gold could rise dramatically, even reaching numbers far above where it sits today. These are known as high-risk, high-reward bets. They do not require gold to actually reach those exact prices to be profitable. They simply require prices to move upward by a meaningful amount before the contract expires. So far, nothing has been confirmed. No law has been passed. No official statement has named July 4th as a deadline for any major change. What is confirmed is this: the conversation around the dollar, gold, and the country's debt has become louder and more public than it has been in years. This has been Golden Crest Finance, helping you separate fact from speculation. You said, start with part 3, more unique 700 words. Every financial decision made in Washington eventually reaches someone's kitchen table. This story is no different. For ordinary families, the most direct consequence is uncertainty. When gold and silver prices move sharply in a single day, the impact lands hardest on those who hold these metals for long-term safety, not quick profit. Retirees who placed part of their savings into gold did so to protect against inflation and market swings. A sudden drop, even a temporary one, can feel unsettling, even if the long-term reasoning behind owning metals has not changed. Younger investors face a different kind of consequence. Many entered the metals market only in the past few years, drawn by rising prices and growing talk about economic instability. For them, sharp price swings can be confusing and even discouraging, especially without the experience of having lived through similar moments in the past. On a national level, the consequences reach much further than personal portfolios. The United States carries close to $40 trillion in debt. This year alone, the government must refinance about $10 trillion of that amount. Next year, another $11 trillion will need to be addressed. These are not small numbers. They affect interest rates, government spending, and ultimately the cost of living for everyone. If the dollar weakens significantly, borrowing becomes more expensive for the government. Higher borrowing costs can lead to higher taxes down the road, reduced government spending in certain areas, or both. This is part of the reason officials have placed such heavy emphasis on keeping the dollar attractive to foreign buyers and investors. A trusted dollar means cheaper borrowing. A weakened dollar means a more difficult financial path ahead. At the same time, there is a deeper tension at the center of this entire story, one that deserves careful attention. Officials have spoken about defending the dollar by keeping it strong, which generally means keeping competing assets like gold less attractive in comparison. Yet other voices within financial and political circles have floated the idea of a gold revaluation, or gold-backed bond, which would require gold to be seen as more valuable, not less. These two ideas do not naturally fit together. A government cannot easily want gold to stay low in value to support a strong dollar, while also wanting gold to rise in value to support its debt. Economists and analysts have pointed out this contradiction publicly, and it remains one of the most debated parts of this entire conversation. There are also global consequences worth noting. Central banks in other countries, particularly in nations like China, have been steadily increasing their gold purchases for more than a decade. This shift suggests that some countries are quietly reducing their reliance on the US dollar as their main reserve currency. Even some allied nations, including Poland, have been adding significant amounts of gold to their national reserves in recent years. This global movement matters because it shows that confidence in the dollar is not guaranteed forever. If more countries continue shifting toward gold, the United States may face growing pressure to defend the dollar's position even more aggressively in the future. There are different perspectives on how serious this all is. Some analysts believe the recent gold and silver correction was simply a natural pullback after a long period of rising prices, with no hidden agenda behind it. Others believe the timing of recent events was too coordinated to be random, even while acknowledging that hard proof remains difficult to find. Both perspectives raise fair points. Markets do experience natural corrections. At the same time, large financial decisions rarely happen without some level of strategy behind them. Viewers are encouraged to weigh both sides carefully, rather than accepting one explanation as complete fact. What is clear is that everyday people are not separate from this story. Whether someone owns physical gold, holds retirement savings, or simply pays taxes, the outcome of this larger dollar versus gold debate will eventually touch their financial life in some way. This has been Golden Crest Finance, breaking down what really matters to your future. So where does this story go from here? Many eyes are now turning toward the Federal Reserve's upcoming meeting in July. This meeting will give analysts and everyday investors a clearer picture of where interest rates may be headed next. Since interest rate decisions directly affect the value of the dollar, and the dollar's value directly affects the price of gold and silver, this meeting could become an important turning point in the months ahead. Viewers should also keep an eye on July 4th itself. Some have speculated that this date could bring news related to gold revaluation or a possible gold-backed bond. As discussed earlier, none of this has been officially confirmed by the Treasury Department or any government agency. Still, the date has become a symbolic marker in many financial conversations, and it may bring some clarity, one way or another, in the very near future. It is worth asking, what would a true gold revaluation actually mean for the average person? Would it strengthen trust in the financial system or create new uncertainty in currency markets around the world? These are not simple questions, and reasonable people can disagree on the answers. Viewers are encouraged to think through these questions for themselves, rather than relying on any single source for a final answer. Another important question involves long-term debt. With $10 trillion needing to be refinanced this year and another $11 trillion due next year, how will the government manage these obligations without placing additional pressure on everyday taxpayers? This is a conversation that will likely continue for years, not just months. For those who hold gold, silver, or other long-term assets, this may be a good moment to review personal financial plans. Diversifying savings across different types of assets, rather than relying heavily on any single one, has long been considered a responsible approach to financial planning. It may also be worth speaking with a trusted financial advisor before making any major decisions, especially during periods of market uncertainty like this one. Staying informed will be one of the most valuable tools available in the months ahead. Watching official statements from the Treasury Department and the Federal Reserve, rather than relying only on rumors or social media speculation, will help separate confirmed facts from guesswork. Golden Crest Finance will continue following this story closely and will share verified updates as they become available. It is also worth remembering that financial history often repeats familiar patterns. Markets rise, markets fall, and confidence shifts over time. What matters most is not reacting to every short-term swing, but understanding the bigger forces at work behind these movements and making thoughtful decisions based on long-term goals rather than short-term fear. As this story continues to unfold, one thing remains certain. The relationship between the US dollar, gold, and the country's growing debt is one of the most important financial conversations of this era. It touches everything from retirement savings to global trade to the everyday cost of living for millions of families. Viewers are invited to share their own thoughts in the comments below. Do they believe a gold revaluation is realistic or simply speculation? Are they adjusting their own savings or investment strategy in response to recent events? Hearing different perspectives helps build a fuller picture of how this story is being understood by people across the country. Golden Crest Finance will continue to bring clear, fact-based updates as more details emerge in the weeks ahead. Thank you for spending this time today learning alongside this community. Stories like this one remind everyone just how closely connected personal savings are to decisions made far away in Washington. This has been Golden Crest Finance. Stay informed, stay prepared, and take care of yourself and those around you. You said, write a highly SEO-optimized YouTube video description of about 150 words.